I just want to talk a little bit about what the banks are doing. I also get the host of this, but I also represent Cardinal Financial. I'm a loan officer for them, and I can tell you the different things and challenges that the banks are, we're running into. Here's what we're running into. We have to verbally verify everybody's employment every 3 days until it's closing, and then 3 days after the closing. So people that are like working right now and maybe furloughed in 3 days, we would stop the funding on those loans. So you have to be very careful. You have to communicate with your clients, and you have to make sure that everybody is staying working and that they're healthy and that they're safe. Listen, if they're furloughed and they go back to work and they give us a pay stub, we can then close that loan. But we don't want anybody going to work just because they're in the middle of a refinance or a purchase, right? We want everybody to remain safe. We want everybody to do things per the CDC and per their employers, right? So it might take longer to close a loan, but being employed is very important. Being employment is unacceptable. So we do have to wait for you to be back and get a pay stub. So that's one hurdle that the banks are seeing. The other hurdle that we're seeing is that guidelines are a little bit tougher. Does it mean that the programs aren't available? No. It just means that, listen, we might want to see some reserves now. We definitely want to make sure that our files are a little bit stronger than they used to. We want to make sure that the employment is stable, and we want to make sure that we are not putting our clients in any kind of disadvantage during this COVID. People that have multifamily houses where the rent isn't coming in, we're still using that rent to qualify, but on the lender side, that's not income coming into the house. So we really want to make sure that our clients can be making those mortgage payments, whether it be on a refinance or a purchase. I think that I read an article the other day, Eric, the owner of Better Qualified, and I'm sorry he couldn't be here today. I was going to ask him to join us just to kind of give us some insight about credit, but what's happening is that a lot of creditors are lowering high credit balances, and that is going to take away the 30% usage, right? What does that mean? So if I have a high credit of $1,000 and I owe $300 on it, I'm at my 30%, and that kind of really helps my credit score. But if my Home Depot creditor lowers that to $500 and I still have that $300 balance, now I'm over 50%. My credit score is going to go down. Credit scores are looking at them more heavily now than ever, right?
Disconnected.
Josh, you all right there, bud?
Sorry, yeah,
technical difficulties by Ross. So just be aware that between credit, income, and appraisals. Now, we don't have an appraiser on here because directly as a lender, I'm not allowed to physically talk to them directly, but I can tell you that even though the market is stabilized, I do believe that we see some values coming in above, some values coming in below. So we just need to make sure that Giovanni, representing you as a buyer, that she's doing her homework and getting the comps and making sure that she's negotiated the right price for that house so that we have a very smooth process, right? So I know that Giovanni does her due diligence because I've worked with her for years now, and I know that she's probably one of the most thorough realtors I've ever met, which is why I love to work with her. She's also a little pushy, and I think that everybody on this Zoom would agree with me that she could be
oh my God, don't make them agree to that.
We would not have it any other way because Giovanni is fighting for you as the seller or the buyer, whoever she's representing. She wants to make sure that she's delivering on all points, and so she does. And so the rest of us on this Zoom call get pushed around a little bit, but we love her anyway. Look at Steven Smith.
I do it with love.
I got a little black mark. I got a little black mark right here.
That's right.
I told you.
The only one that doesn't get affected is Erica because I'm the shield of that. But So that's just to kind of give you a little insight of what the lenders are going through as far as what COVID is bringing changes to our day. And I hope that you guys learned something today. And if you have any questions, Giovanni will post all of our contact information and our phone numbers when she airs this on Friday. And you can feel free to call any one of us with your questions. We would be happy to help you. And I can't thank my loan process partners enough for taking time out of their day to do this. Does anybody have anything that they would like to add before we sign off and say thank you and goodbye?
Thank you for making yourself available today. Thank you.
You're welcome, Giovanni. Yes, Ricky, what's your question, honey?
Did you cover how long someone can be furloughed before they come back to you?
So they just have to go back to work with one pay stub because COVID is like the reason for it. Now, the challenges that we're going to see is how many companies are really going to reopen and have a staff and things like that. So we are just kind of individually talking with the clients that have furloughed and staying in close contact with them about when they're going back. And then we have to review their, go back to work orders and kind of see if it still fits the parameters for a loan. And I got to be honest with you, last month I lost 5 loans due to furloughs and appraisals that didn't come in where they should have. And it's been a difficult time and I'm not used to losing loans. It's a little bit devastating. I kept them and we're keeping those files on hold until they can get back to work. And we're going to check the appraisals again and we're going to see what we can do. And who knows what kind of programs that COVID is going to create for us in the future as far as refinancing. Now, purchases are just going to be purchases, right? You still can do 3% down. You can still do 3.5% down. You could do a veteran's loan with no money down. Like there's so many things and options out there that are still available for purchase, but refinances are a little bit different. Thanks for the question, Ricky. Anybody else have anything to add? All right, family. I appreciate you guys. You guys stay safe.
Quick picture.
What?
Wait, quick picture.
We're not even there. She's taking a picture.
Wait, before everybody turns off.
What do you want? Side view? What do you want?
Your best angles.
Oh, that would be person. Thanks, guys. Go back to work.
Thank you, guys.
See you later.
Bye.